Yeah, what's up, guys? This is Mr. BNB. A shout out to all traders out there who are trying so much to believe in themselves. So, guys, I'd like to say Happy New Year to every one of you out there, to all traders out there. So, guys, today I want to show you some chart patterns, some structure you're going to see on the chart. And also, before we continue, I'd like you to subscribe to our YouTube channel. Also, click on the subscribe button. Drop your comments below and let's see how we can help you. So guys, now let me show you some structure you are going to see on the chart. I want you to follow this teaching, and also I don't rush when I'm teaching, so I don't want you to skip this video and I don't want you to rush this video. So now some patterns that you're going to see on your chart. Let's start from here. Okay, so now look at this diagram here. This is a bullish market, right? So the market start pushing from this, the structure, the price action we have from here to here is a bearish market. So from here to this area, from here, so from here to here is bearish market, right? Bearish market. Understand? So here is a bearish market. The price action from here to here is bearish. So, and after that, you will realize that the market changed from a downtrend to uptrend market, which is from here to this place, So the price action from here to this place is uptrend. Now, how do you enter the market? What are the things you see that make you to enter the market? So I'm going to show you now. I'm going to show you. So guys, now look at it. The market, after the market pushed from this low, from here, sorry. So from here, the market push up, push down, push up. So when the market got here, the market come and mitigate the previous demand zone, right? The market fell and it mitigates our higher time frame demand zone, understand? So, and then if you scale down to maybe 15 minutes or 5 minutes, the market push up. As the market push up, right, the market push down again. And then the market fails to break this low. It is very, very important. This is our previous lower low. You understand? This is our lower low right here. So the market push up and this drop down, and it could not be able to break this last low. And we see this one as our SLS. Understand? So the market push up, right? So here, as the market push down, the market come and mitigate a demand zone here, and which is our entry. The market came to mitigate a demand zone here. Remember, we already have our change of character. You know, we have lower low, lower high, lower low, lower high. You stand now. As the market created the last low, and after that, the market created higher high, this higher high here, right? As the market created the higher high. Now look at it. The market break the last higher low. You stand now, lower low, lower high. The market breaks the lower high, right? Which is this one, the last lower high. You stand. This is lower low. This is lower high. This is lower low. This is lower high. This one is the lower high, right? You understand what I'm saying? So the market push up to break it. Once the market breaks it, it means that the market is about to change structure from downtrend to uptrend. You understand what I'm saying now? So the market now push down to mitigate and other blocks. So now let me show you something. Let me show you something, guys. Now look at it. As the market is falling, you understand? Here you will see different kind of zone. You're going to see a demand zone here and another one here. But the truth of the matter is that which one is the right point of interest you want to choose to enter the market. Remember, you cannot choose this one. You cannot choose all this one, right? So remember this one, this drop you see, it breaks this this structure here, this BMS here. You can call it BMS, and also we can call it liquidity graph. Understand? So it is a valid order block. You understand what I'm saying? It is a valid order block. So here is our good point of interest to enter the market. Understand? So as you can see, the market push up. After the market start buying from here, the market could not be able to break this last low, right? So the market start pushing up. As the market start pushing up, look at it, the market pulls down, understand? And after that, the market push up again. As the market push up, the market starts falling, right? Don't see this place as your entry. Don't see this place as your entry, right? This is just what we call IDM, which is inducement, right? So the market is going to grab it. It is just a trap. Understand? It is just SMT, which is smart money trap. It is just trap. This is just a trap. Understand? You know, as the market is pushing to the upside, the market will be creating other block, here, other block as well. Understand? Even here, the market can still create other block here, but there is an extreme other block, which is this one, right? So as the market is falling, as the market starts falling, don't see this as your what? As your point of interest. That is not your point of interest, right? That is just an inducement, because the market can do something like this, mitigate it, push up, understand, for new buyers to start coming in and then push down again before pushing the market to the upside, right? You understand what I'm saying? So that is just a trap. That is just a trap. Understand? So this thing you are seeing here, this other block you are seeing here, is just a trap. You understand what I'm saying? It's just a trap. The market will push up, push down. Understand? You can just set your sell limit here. After setting your sell limit, and wait and see how the market plays out. So you put your buy position here, put your buy position here, put your stop loss here. Understand? You can just set a limit order and put your take profit. So your what's it called? Your first take profit will be here or here, understand, or this place. That's not bad. Understand what I'm saying now? So that will be your first take profit. So that is one structure you're going to see on the chart. Now, another structure you're going to see on the chart is that, look at this diagram here. The market push to the downside. As the market pushes to the downside, market push up again, push down, right? As the market push up, you understand what I'm saying now? Now the market push down. So we have lower low, we have lower high, we have lower low, then we have the last lower high, right? Now look at it. Here, the market grabbed the liquidity, so we now have the last lower low. I used to advise my students to always look for their last lower low or last higher high. So the market pushed down. As the market pushed down, the market now push up, to mitigate something here, to mitigate this other block, right? To mitigate this other block. So this is not the right area to buy. This is not the right area to buy, because we have not seen an other change of character. The market has not given us change of character. Understand what I'm saying now? So the market push up to mitigate an order block here. Understand now? Because the market has not break this high we are seeing, this high, understand? We have lower low, lower high, lower low, lower high. We're expecting the market to break this lower high. This is our lower low. This is the last lower low. So this is the last lower high. We're expecting the market to break it first. Understand? So once the market breaks it, that gives us enough confidence to trade the forex market. Understand? So now look at it. The market now push up to mitigate this order block. You don't need to buy at that moment. Wait for the market to form a good structure for you. Understand? Because this is just a trap. So the market now push down. As the market push down, the market push up. Now it breaks this change of character. The market now gives us change of character. This is a proof that the market is about to change from downtrend to uptrend. Do you understand what I'm saying now? So the market now push down, the market push up again. Now you see the market start falling. As the market start falling, don't buy here. this is just inducement. This is just inducement. Wait for the market to do what? To mitigate this zone here. To mitigate this zone, right? Wait for the market to mitigate this zone before buying to the upside. Hope you understand what I'm saying. So guys, now the market starts forming lower low, lower high, lower low, lower high. So this is our last lower high. Understand? As the market pushed to the downside, this is our last lower low, right? So the market grab all this liquidity. Understand? Maybe BMS. Some people call it BMS. Now the market now push up to mitigate an order block here. This order block you are seeing is just a trap. It is not a real place. Understand? This is just a trap because the market is, look at it. The market pushed up but could not be able to break this last high, this lower high. Understand now? So instead, the market pushed to the downside. As the market pushed to the downside, you see entry failed. Wait for the market to push up and break this change of character and break this lower high and give us change of character. Then here should be your what? Entry point. This should be your high entry point. Understand? Because the market is going to push up and push down to that zone before buying. I hope you understand what I'm saying now. So this is all about the bullish market. So let me further look for the bearish. Okay, the bearish market. Now this is the bearish market. Look at it. Look at this bullish market. You will see that it is quite different from each other, right? This one is different from this. Understand? It's very, very different, right? If you notice, you realize that this one, as the market pushed to the downside, the market pushed up to break the lower high. Understand? But this one just mitigates an order block. Understand? Push down again before breaking the lower high. Understand? So now let's check the next diagram. Now this is a bearish market. After the market moved from uptrend, we have something like this. Let me use this. We have the market push higher highs and higher lows, higher highs, higher lows, higher high. As the market created higher high, which is the last high, you understand one now. The market created higher high, which is this one. You understand now? So that higher high, it has mitigated something here. The market has mitigated something here. You understand what I'm saying now? So the market has mitigated something here. So then after that, the market pushed to the downside. As the market pushed to the downside, the market breaks what? It breaks this low. It breaks this higher low. You understand what I'm saying now? The market breaks this higher low. Once you see that the market has break that higher low, it means that the market is about to change what? It's about to change structure. The market is about to change structure, right? So now the market push up higher highs, higher lows, higher highs, higher lows, higher highs. So the market mitigates something here. Now this is our last higher high. The market pushed down. I don't mean that the market do something like this without breaking this low and go up. This is a continuation that the market is still in uptrend, but the market breaks this higher low, right? The market breaks this higher low, breaks it. After breaking it, you stand now. After breaking it, at times the market can create something like this. Just look at it. The market can create something like this, and here you can meet different order block here, order block here, order block here. You understand me now? They are just SMC trap. Understand? This is just trap. Understand? These other blocks are trap, right? So we are anticipating the market to do what? To push up, right? You can see the market push up to mitigate this order block. You understand me now? To mitigate this order block, because the market has given us change of character, and after that the market start pushing to the downside. As the market pushed to the downside, remember that the market has left an order block behind, which is this one. Which is this one here. This one here. This order block has been mitigated by this. Now, as the market pushed to the downside, the market has created another new order block. Are you following what I'm saying? the market has created another new order block. So the market pushed to the downside. As the market pushed to the downside, the market did not break this low, right? The market did not break this low. So the market did not break this low here. Instead, the market just pushed to the downside. And after pushing to the downside, the market push up again, right? So as the market push up again, remember the market has not break this BMS, this low here. So the market push up again, then fell. As the market fell, now the market has given us enough. The market has given us enough proof that this order block is valid. This point of interest is high point of interest. It is an extreme point of interest. You understand now? Extreme order block, right? As the market pushed to the downside, as the market pushed to the upside, now the market pushed to the upside, but this move here, this move could not be able to mitigate this zone. This push up could not be able to mitigate this zone. Instead, the market pushed to the downside and do what? And break this low. Now, this has given us enough confirmation that here is going to be our entry, right? So then you can set your sell limit here. Then you can set your pending order here, right? Then push. Your first take profit should be this low, right? Your first TP should be this low. Your first take profit should be this low. Then second take profit should be maybe maybe an order block here. You understand me now? So the market push up and grab this inducement or liquidity. You understand me now? Inducement or liquidity. The market grab it and then the market fell, push to the downside. Understand? So now let's continue to the next paragraph, to the next diagram. Now look at it. The market push up. We have higher high, higher low, higher high, higher low. Then the market mitigates this order block, maybe an order block here. The market mitigates the supply zone here. And after that, the market pushed to the downside. As the market pushed to the downside, now the market mitigates BMS here. Sorry, the market mitigates order block here. I repeat, as the market pushed to the downside, you will notice that the market did not break this low. Instead, the market mitigates this order block. After mitigating this order block, the market starts pushing to the upside, right? Now, as the market pushes to the upside, don't rush yourself, don't sell. Even if you see an order block here, don't sell. If you see an order block here, let's assume the market mitigates this order block, don't sell. The market can do something like this. You understand me now? The market can do something like that. So don't sell. You just have to calm. Don't sell. You don't need to rush yourself. The market pushes to the other side. Higher highs and higher lows. Higher highs, higher lows, higher highs and higher lows. You understand? Now, as the market mitigates this order block, the market now pushes to the upside. As the market pushes to the upside, now the market fell. Now the market has given us change of character. You understand? The market has given us change of character here. Here, the market has break it and it has given us change of character. The market has break this last low. This last low, we have higher highs and higher lows, higher highs and higher lows. The market has break this higher lows. You understand me now? The market pushed to the downside. Now, this is a good confirmation that yes, the market has changed from uptrend to downtrend. You understand what I'm saying now? So from uptrend to downtrend, now the market breaks it. The market push up a little bit. Now, as the market push up a little bit, the market start pushing to the downside again. All this thing you are saying is just a trick. That's the reason why I used to advise people not to rush the market. Even if you are analyzing if you are analyzing the market, you don't need to rush yourself. You have to be calm. You understand what I'm saying now? So the market pushed to the downside and the market push up again, come down. the market breaks this high, it breaks this inducement. Anywhere you see an inducement before order block, and inducement or liquidity before an order block is a valid point of interest. Now the market mitigates this point of interest and start pushing to the downside. You understand what I'm saying now? Now, as the market push to the downside, remember the market will give us, okay, let me do something like this. Now let's assume the market start pushing. As the market start pushing to the downside, the market now give us something like this, push to the downside, give us something like this. You know, this is our new order block. You understand what I'm saying now? The market do something like this, push down again, do something like this. Do you get me now? The market comes down, do something like this, then break it. Now, which one will be your order block? We have order block here. We have another order block here. Understand? Then we have our extreme order block here. Which one are you choosing? You are to choose this extreme order block, right? You have to choose this. You have to choose this extreme order block. This one, you have to choose this extreme order block. This is just an inducement. This is just inducement, and this is just inducement, and these are SMC trap. These are trap because the market can do something like this. Push here and come down a little bit, push up again, push up before selling to the downside. I hope you understand what I'm saying now. So this is exactly what you guys need to know. Now let's check some pair and let's analyze some pair, and let me show you some things about the market. Understand? So now let's start from GBP USD. So what do we have here? Now look at it. Okay, let me start from 4 hours. Okay, now this is our 4 hours chart. Okay, now look at it. The market push the price. Let me explain this price action. The market start pushing from downtrend. The market push. So this from here to this place. I want to explain the price action. We have lower low, lower high, lower low, lower high, lower low, lower high, and until the market got to this place, which the market created lower low. I hope you understand what I'm saying now. So the market created lower low. As the market created lower low, now the market start pushing to the upside. The market start pushing to the upside. Here we have high highs and higher lows, high highs, higher lows, high highs, higher lows, high highs and higher lows, high highs. Then we have higher low. Now, as the market mitigates this zone, this extreme supply zone, the market start pushing to the downside, right? As the market start pushing to the downside, we now have an order block here. This is a good zone. Now let me explain to you. Let me go to 2 hours. Okay, let's check 1 hour. So which one are we choosing? Which order block are we choosing? Are we to choose this one? Are we choosing this one as our order block? No. We have to choose this one here. We have to choose this one here, not this one. Now let me explain the reason. Now the reason is that if you look at this chart very well, we realize that the markets grab all this liquidity. The markets grab all this liquidity here. Understand? The markets grab all this liquidity before pushing to the upside. So this is our order block, right? So, and then if you check very well, you will agree with me that the market has not mitigated that zone. The market has not mitigated that zone. Understand? This order block. The market has not mitigated this order block here. Now look at it, guys. Now let's scale down to 15 minutes and let's see what is currently going on. The chart. Now look at this price action here, from here to this place. From here to this place is what we want to focus on now. Now look at it. We have here. We have what's it called? We have change of character. We have PMS. Understand? We have BMS. Then the market grab all this here. We have BMS. Understand? So all this one you're seeing here, they are just liquidity. Understand? They are just liquidity. So the market grab it and mitigate this 15-minute order block. The market mitigates this 15-minute order block. As the market mitigates this 15-minute order block, the market start pushing to the downside, right? As the market pushes to the downside, the market come and mitigate this order block. It is a valid order block because it broke this structure here, this low here. It grab it, so the market mitigate it, then push to the upside again. Instant. As the market push up to the upside, instant. Now the market now give us equal highs here. As the market give us equal highs, now what are we focusing on? Remember, we still want to sell, but the fact is that the market has left an order enough imbalance here. There is enough imbalance here, right? So then we have order block here. We have order block here. Understand? This is our order block. We have order block here. So we have order block here. This green candle. Understand? This is our order block. So now we have imbalance here. We have imbalance here. Understand? So we have imbalance here. So guys, now we have imbalance here. Now here, as you can see, you can't choose this as your order block. It's not possible. No. This would be very, very bad if you choose it. Stand. So here we have inducement is here, right? Inducement is here, and then this is just smart. This is just SMT. This order block you are seeing, this zone, this base zone you are seeing is just SMT, which is smart money trap, right? So what I'll be expecting on this place is that I'm expecting this market to do what? To break above this place, to break above it, then push to the downside again, break this high, come here before selling to the downside. Understand? So here is going to be our short position. Here is going to be our entry. You can put your stop loss above this high. Above this high. You can put your stop loss above that high here. Stand. So then sell to the downside. So here is going to be your first entry because we have liquidity here. We have liquidity here. Okay. We have liquidity here. Understand what I'm saying now? Here can be your entry. Understand what I'm saying, guys? So here can be your entry. Then wait for the market to mitigate this zone before selling to the downside. So this is all about GBP US. Let's check the next pair. The next pair is USDJPY. Now on USDJPY, what do we have? The directional bias of this market is still bearish. As you can see, we have what's it called? Lower low, lower high, 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 lower low, lower high. Then we have lower low. Then we have another new lower high. We have lower low now. Understand? So we will be expecting a new lower high before expecting another new lower low. So because we still have some other block here that we're expecting the market to come and mitigate. Understand what I'm saying now? So now here, what do we have here? Do you agree with me that the market did not mitigate this zone here? The market did not mitigate that zone. Understand what I'm saying now? The market did not mitigate that zone. So the market did not mitigate this zone here. Not at all. So here we have our last low here. We have this low here. So what are we anticipating? We are anticipating a bearish market. We are expecting the market to break this low. And after breaking it, we are expecting a pullback. then before we sell. Understand? So let me scale down to 5. Let me scale down to 15 minutes and let's see what is currently going on here. Let's check. Okay, hold on, guys. So here we have break of structure here, and then here we have our what? We have our order block here. Let's check 15 minutes. We have our order block here, and then we have the market grab this. Stand. So this is a good point of interest. So what are we anticipating here? And then if you check very well, you realize that we have enough imbalance here. Stand. So we are expecting the market to break it to the downside and push up again. We're looking to sell here. You start what I'm saying now. So we'll be looking to sell here to go short here. You understand what I'm saying now? To go short from this area. Do you get? So this is going to be our BMS liquidity grab, or understand? So here is going to be, here is another BMS, understand? So all this one you're seeing, all this one you are seeing, they are just trap. This one is just trap. Understand? This one is just trap. Some people will put their, what's it called? Their point of interest here, understand? As sell, understand? So guys, this is what we are anticipating on USDJPY. Now let's move to the last pair. Okay, this is our last pair. I analyzed this market yesterday, and then the market is still going in our favor. Let's check 4 hours. We are still expecting the market to go to our favor, understand? Now look at it. The market come and mitigate. Okay. So here, the market has mitigated 4 hours order block. The market has mitigated here. There is an order block here, which is 4 hours order block. So the market has pushed to upside to mitigate that zone, right? So the market has mitigated. And after that, now here we have buy side liquidity faking, right? It has been grabbed, right? So this is our change of character. Here is a base. There is a base here. There is a demand. There is a supply zone here. So the market pushed to the downside, break this change of character, give us BMS. So as the market gave us BMS, the market created a lot of liquidity, buy side liquidity. The market grabbed it, right? So look at it. We have, this is our last one, and we have change of character. We have BMS, understand? So we are expecting this one to push up and break this one to give us a new BMS. You understand what I'm saying now? So what are we anticipating here? We're expecting the market to do what? To boost to this place, then give us what we call change of character, which is confirmation entry, right? The reason is that, the reason why I'll be waiting for change of character is that we have this liquidity here. So market can be crazy. The market can do something like this. The market can do something like this. Push to this place, comes down, stand, and after that, push up to grab all this liquidity, to grab this liquidity, this one and this one, to grab it. And after grabbing it, and start falling to the downside and clear this and grab this sell side liquidity. So guys, I'm very sure you understand what I just taught you now. So guys, thank you so much for watching this video. God bless you guys. Please subscribe to our YouTube channel to get more videos.